All right. So I wanted to start off here, because I saw this, and this to me is important because I feel like as a trader, you're gonna run into again one of the three ways of how price is going to be able to show itself to you, right? Price either moves in downtrends, uptrends, or is in consolidation. Okay. Now, how do you know something is in consolidation? When basically there are no new highs formed, or you have a bunch of equal highs and then you have a bunch of equal lows. Anytime that you have equal lows and equal highs within price action, that lets you know within the market structure that you are in the consolidation, ranging, coiling. There's a lot of words for it, but the main three that you'll more than likely hear me use is either going to be ranging, consolidation, or coiling. What's the point of me saying coiling? Because ranging, right? Range is going from up and down. Consolidation, that kind of makes sense. It's self-explanatory. But why coiling? The reason why is because when price is coiling, I want you to think of a rattlesnake. Anytime that price is coiling, it's more than likely getting ready to strike. It's either going to move towards the downside or the upside, and that's where you get your impulse or your indication, right? So right now we have a uptrend. And why do we have an uptrend? Because we see, high, low, higher low, higher low. Let me draw this out, just so people can see what's going on. So low, high, higher low, sure, here for sure, then here for sure. I'm not gonna count that area over here. Here for sure, and then it stops right about here, and then we don't get to our next low point until there, right? And then that's where we end up getting into this phase of where the market is basically what? Lower high, then higher, then equal low, then guess you could say lower low, and then back to a higher low. So again, prices all over the place. It's not trending, right? We're looking for trending. Now, to answer this question, in case you were thinking of it, right? Because I know there may be somebody that watches my video that is a scalper, and this is the 4 hour time frame that we're on. But scalpers operate off of the 5 minute all the way to the hour, right? They don't operate anything above that. So they won't look at the 4 hour, they won't look at the daily, they won't look at the 8 hour, they won't look at the weekly, they won't look at the monthly. They're gonna literally do 1 hour, maybe 15 or 30 minute, and then the 1 minute and the 5 minute for their entry. The 5 minute probably for a setup, and then the 1 minute for their entry. The 30 minute and the 1 hour serve as their higher time frames, and again, that is for the scalpers, right? But me, I'm an intraday trader. I do not scalp. I don't do that. I don't want to. It's nothing against them. It's just not what I want to do. So to address that question that I was about to mention, could you scalp this? The answer is yeah, because if we go to smaller time frames, you're going to see higher highs and higher lows, or lower highs and lower lows, based on the mini trend that is happening, like right within this, right? Because somebody can just say, well, that's a high, that's a lower high, that's a lower low, that's a high, that's a low, that's a lower high, that's a lower low. I can scalp this little section, right? Not this whole entire trend, but this little section. So as a scalper, you could do that. But you're gonna have to get in and out, and again, that's the point of scalping. It's to get in and out. It's not to stay long. But again, we're not gonna cover that here. So I just bring that up so therefore people can understand in case they wanted to ask that question. But this to me is complete consolidation. I don't know about you, but to me, I don't see anything except this. I see resistance, right? And I'm gonna change it to gray because I actually really like that gray. I ain't gonna lie, that gray is banging. Oops, no, not what I wanted. I wanted this. Yes. Yeah, I love that. I don't know what it is. I just love that. All right, cool. And then we have lows. We have support. We have resistance. Simple as that. So let's go ahead and write it in. So 4 hour resistance, 4 hour support. Oh, wrong shit. Okay. There we go. All right, so we have 4 hour support, 4 hour resistance. Let's drag this all the way across so you can see what it all encompasses, and then also let's lower it so you can see the touches, which is basically 1, 2, 3, 4, 5. So you have 5 touches here. You have 1, 2, 3, 4, 5. 5 touches there. So cool. We clearly see we have support and resistance right here. So what we're looking for in this instance is I'm looking for an impulse to the downside or to the upside to break my support and resistance that lets me know that we are back in a trending market. This pair is the Swiss franc, Japanese yen. I will go over more what those currencies represent on the fundamental side of things once I start the fundamental analysis and the fundamental sides of Forex, because a lot of people just think it's just random shit, but it's actually not. You have to understand how currencies move and how central banks, economies hold these certain assets like the franc and the yen and the dollar. They are safe haven assets. And they are going against gold. So the best way to understand is if gold is going down, then the dollar is shooting up along with the franc and along with the yen. But again, we're not going to go to that part of it at all right now. We're not going to do that. So let's begin. Let's see where price goes. Okay, we're on the 4 hour, so this is going to go pretty fast. So I'm just looking for price to not, first of all, freeze on my ass, but second of all, is to go ahead and break resistance. All right, cool. So just like that, we got a break in resistance. So now we know we have a impulse to the upside. So now we know that we are currently now going to be in a uptrend. All right, cool. So since we're currently in an uptrend, let's go. All right. So now I am going to find out where this happened. I'm going to choose here because it finally eclipsed this high. If I have to choose here or choose here, but either way it goes, I feel more comfortable seeing that this got taken out, right? I like the comfortability there. It broke out, so this lets me know that this was the move right here that started it, right here. Okay, so now that we got that established, let's go ahead and, again, draw the Fibonacci. The Fibonacci is basically a tool that is used to let us know where the pullback is going to come. It's either going to be at 23%, 38%, 50%, 61%, 78%, 100%, right? 23% basically is a light pullback. It's a 23% chance of a reversal. So it's going to be a light pullback. You won't have a deep reversal, and you're basically going to be seeing price either again stall out or it's going to go back in the trend. A 38% is even better. A 50% is even better. 61% is even better because now you're going to see it on the other side of the Fibonacci, which is where it will end up. And this is also known as the golden ratio, 61.8 Fibonacci. But again, I don't want to go too deep into that. I just want you to understand how to utilize the tool, which is where this goes, it goes over here. If it goes deeper, it goes back over here. If it goes deeper, again, back over here. Cool. So now let's play, right? Let's play. Let's figure out where we're gonna go. Let's see where this downtrend or this correction is gonna happen, because we have our now impulse and we have our correction, and this was our correction. So now you understand what I'm saying, right? This is what our correction was. Let me go on the 1 hour so we can break this down a little bit further, okay? So cool. This is the outbreak. Here, price came back, and now it pushed up from here. So that was based on our 4 hour fib. Let's just attack this real quick. I want to test something real quick. So this one got to a 38% pullback, right? If we eliminate this real quick. That's where it ended. It went back and touched resistance and bought, right, and became support. So this resistance, 4 hour resistance, became support because what? It's now above it, and now we have a new resistance. Okay? So I just want you to think of support and resistance as bottom, top. Wherever price is stopping at the top, that's resistance. Wherever price is dropping and stopping at the bottom is support. Okay? Support will cause buys, resistance will cause sales. Let me write that down for you. Resistance causes sells. Support causes buys. Okay? So cool. As long as you understand that. So if you see resistance get broke through, it means the resistance gets broken through, new support. And then conversely, cool. Now back to the topic. All right. This right here happened. So now that we got that out the way, I don't care to trade that. That's not a real pullback to me. If anything, that was just a wick. And again, this was strong. This was a strong area for once was buyers, or excuse me, sellers. But now it's a strong area for buyers, and that's what we got that bounce off of. Okay. So, because again, it's caused by that impulse. So hopefully you're starting to see the picture a little bit. If you have a strong impulse and it breaks through resistance, of course, buyers are now in control of this area. They take over this area. So that means if price comes back to this area, it's now a what? Support causes buys. So kind of think of it like capture the flag. You get what I'm saying? If somebody comes through and takes over your territory, now this is a strong area for the person that came through and took over your territory. So whatever their rules are, it goes. So since the buyers came through, took over this territory, well, what is their rule? We buy, my nigga. We buy. That's all we do. Boom. Click. All right. So now what I want to do is I want another impulse to happen, because remember it's ICI, which is indication. Oop, that don't happen. Which is indication, correction, indication, or impulse, correction, impulse, or known as indication, correction, continuation, or impulse, correction. I'm over here fucking up. Correction. Mike Lito says, get money. So I want y'all to just understand in general. Bro, look. This is repeated over and over and over and over and over again. All right, cool. As long as you understand that. I just want y'all to understand that. I have to be redundant with it. So therefore, whenever you run into somebody that says, oh, well, I trade ICC, or I trade IC this, or I trade... Okay, cool. You just basically do market structure, my nigga. That's all you do. You just do market structure and price action. That's all you do. You can make it brandy, or you can make it a brand thing, but at the end of the day, we just here to learn. All right? Cool. So we got this impulse here. We had a bit of a correction. I'm looking for another impulse. The good news is that we have a trend. Let's go to the 4-hour real quick so we can be able to look at this from a macro or a higher scale, because this is actually very beautiful, because now this lets us know that we have our actual trend here, right? We have our new impulse here. This is where things begin. So now let's kind of, how could you say, let's start over, right? Let's start over. Let's see if we get a real impulse, or excuse me, a real correction. And what I mean by real correction is like an actual real pullback. You can even see here on the 4-hour. This is just price consolidating. It could have had it, but it just wicked out. It wicked out because of what? Right here, all right? So let's see if price actually begins to pull back. Let's move these out the way real quick so y'all can see what's going on. Not you. All right, cool. All right. So let's have fun. Let's see what's going on. We have even more of an impulse, right? So cool. I'm going to mark that. I'm just going to keep raising it. That's all I'm going to do. I'm just going to keep raising it until I get an actual correction where I can respect it. Cool. Price just keeps going up. Lovely. It's not a bad thing. All right, so now we're starting to see some pressure up here. Let's look left. Let's see if there's a reason for it. None so far. So right now what we're seeing basically is an all-time high. At an all-time high, of course, what goes up must come down. So we see an all-time high right here. We're going to put ATH for all-time high. So what goes up must come down. So now I'm basically very eager. I was going to say something nefarious, and I ain't going to do that. But now we see, as you can see, this resistance being formed right here. So, all right, cool. We know that sellers are starting to take in control. We see by the wicks, okay? The wicks. All right, the wicks. So we see sellers are starting to take control in this area. So we're going to see how strong the sellers are. Are they going to put us back 23%, 38%, 50%, 60%? And then from there, we'll find out whether or not if we can stay within a uptrend and buy, or if we're getting ready to switch in reverse trends and we're going to go to a downtrend and begin to take a sell position. Because I still want to trade, right? I still want to trade. So let's find out what happens. So let's fast forward this a little bit. What did I tell you? Price can only do what? One of three things: up, consolidate, down. That's all it can do. So right now we're seeing a battle basically happen. We're seeing support breakthrough, right? We're seeing support form, not breakthrough, but we're seeing support form, which is right here. We're on the 1 hour time frame, by the way. All right. Cool. Technically, it had that 23%. So that's what the pullback was. Now, what we're seeing here is just in general, we're seeing how price can basically be sometimes, where price will literally and only literally pull back a little bit based on like a Fibonacci that's on a 4 hour. Even if you were to put it on the 1 hour, let's try it on the 1 hour real quick, just so we can see. Actually, hold on, let me do this. Step. Point A to point B, right? Again, 23%. So sometimes you're gonna get a pullback that is not all the way full. You can take it if you want to, but again, me, I don't, because again, it's not a full pullback. You're basically just kind of only getting a little bit of I guess you could say you're getting the shavings of it, and that's not what I'm looking for. Part of being a trader, from what I've been learning, is a lot of discernment. You have to pick and choose which setups are a good setup. Because if you don't pick a good setup, and say, again, you're just chasing money, you're not going to get a really good pullback, and you're not going to get the returns of a really good pullback, which is what goes up must come down, but what goes down must come up. And if it's getting right here, and it's showing higher highs and higher lows, and we already got an all-time high formed, it's going to form another all-time high, or it's going to form another high. Well, imagine that money being collected. You just saw what happened within the previous videos of us doing that. So let's just keep going. Let's just see how much we can really get out of this thing. Let's see. And this is the first time we actually got a real type of consolidation where it was serving as a pullback. But now we have another all-time high formed again. All right. So let's just see what's going on. And that's what we're looking for. Now we got a big push. So we now know that sellers are finally taking in control. So now let's go. This is what we were looking for. Also, that's why you also do not chase all-time highs. Now, I want to break this down real quick, because this is actually very important. I'm glad that this happened. I'm really glad that this happened. This is what we call a liquidity sweep. And the reason why this is called a liquidity sweep is because basically liquidity is money. It's money that is sitting at the top, or money that is sitting in the location. So I want you to understand liquidity by basically being this, if I were to put a connotation to it. Liquidity is money / orders that are sitting in a area. In an area, in a specific area. For those that play Call of Duty, I want you to think of liquidity like camping, where you see orders and they just camping and shit. Goodness gracious, spell liquidity. That's the best way I can give you as far as an analogy when it comes to explaining these orders that sit here. I apologize for my spelling as well. We doing this shit on the fly. But yeah, so liquidity, I want you to think of liquidity, again, I want you to think of liquidity like COD camping. If you haven't played COD, I just want you to think of it as the other definition, which is money / orders that is sitting in a specific area, not is. Again, I apologize for my grammar. That is sitting in a specific area. Goodness. So what happened is that's why price came up here. It wiped out everybody that was what? They had their buys set here. Well, excuse me, they had their sells right here. So resistance, that's going to be the sell, right? So they had their sells right here because it went to all-time highs. But remember, if we just slowly drag this shit across, there are a lot of buyers that are still sitting right here, and they are stronger. Remember, we just came off of all-time highs. So they were basically warring back each other. So, they were like, all right, let's give one more push, knock all of y'all out, and then guess what? The sellers came in, gone. Now, everybody's orders are wiped out. These orders right here, where the stop loss was set right here, and now also the buyers right here, their stop losses are wiped out too. So now we're going to see how far price can actually correct, because again, things can't go up for too high. What goes up must come down, and what goes down must come up. All right, so let's have fun. Let's see how far this is going to go, and then after that we can prepare for our trade. All right, so great. We have our first push back into it. I'm going to actually pull this here so therefore we don't get confused. All right, I'm now looking for higher highs and higher lows since we have just established a new downtrend in this area, right? So I'm looking for higher highs and higher lows within my correction phase. So therefore, what? We can get into the actual trade. All right, so now we're seeing what? Downtrend, so let's draw it. Seeing downtrend right here, let's draw it. So we got here, what? High, low. Yeah, sure. High, low. Lower high, higher low, then an actual same equal high, lower high, then a lower low. So cool. Now we got another lower high forming. That's why, I don't get too caught up in these little things right here. I go to the next highest point. I genuinely do. It makes it so much simpler, so therefore you don't get lost in the minutia of things, because you can. All right, so cool. This is what I'm seeing. I'm seeing significant point, significant point, significant point, significant point, significant point. All of that shit don't matter, especially if it's an equal high or relatively equal. All right, I'm just being real. So cool. We got that, right? So now we're looking for what? I want this, and then this to happen, so therefore I can take my buy. That's what I want. So let's see if I get what I want. Cool, I got a lower low. Let's mark it. All right. Now I have an equal high right here at this area. So this is going to indicate to me, let me not use indication or indicate. Let me not confuse y'all, because I know, especially with you being brand new, a lot of terminology, you fuck around and get the same shit. All right, so I get it. So this is a sign. This is a sign to me that, again, we're getting ready to break structure. And remember what I just drew out, where I said I wanted price to do this. Here, here, boom, boom. That's what I'm looking for, to let me know, all right, we're going to be in a trade. All right. Let's go through it again. Cool. And I got to slow it up now, so therefore we can get what we're looking for. Okay. All right. So we got that lower low. Let's see if we're getting a higher low. All right. Okay. Now, say if we need more refinement and we're unsure, lower time frame. I can't go down to the 5 minute. All right. We're gonna have to quick snipe it then. All right. Cool. Price broke through, but we still have this lower high point right here. We still got it. Okay. This is still higher than this. It's still higher. So this is possible. It's still possible. Let's find out. What we're going to be looking for is an engulfment on the candles. So we basically have all these. We have a bearish candle right here. We're going to look for an engulfment, a bullish engulfment. Okay, so we're basically going to look for candles. We're going to look for a bullish engulfment. And that just basically serves as another confluence. That's all it is. Confluences are basically evidence. Confluences are basically evidence to prove your trade. That's all it is. It's just basically you proving your trade. That's all a confluence really is. It's just extra evidence. So we have this lower low, and now we have a higher low. Now, I'm not sure if I want to take a trade just yet, because I want to see this candle get engulfed. That's what I want to see. I want to see it actually really be true, and it's not just going to fake us out. All right, so things are getting smaller. Now, I want to pay attention to this real quick. We're seeing this wedge form. It looks like there's pressure being formed, and that's what happens whenever a wedge is forming. So I want y'all to see it a little bit closer. All right, let's draw real quick. Here and here. See how that looks like a pizza? See how there's a little triangle? And then this pops out? Cool. That's basically a wedge. All right. So with that being the case, here's what I want to do. We're going to put our stop loss behind that. And since we have our initial correction, right? Because where is our points, right? If we can go back, let's go back to the 4 hour real quick, because that's where our Fibonacci is on. All right, our Fibonacci is here, so we have what? Point A. And then, goodness. Yeah, I know, y'all. I know. It's a lot. Goddamn. I know. All right. We have this higher low being formed, which is good. And now we're starting to see a little bit. Let's actually clear all this out. This is what we're looking at right now. We're looking at this. This is what we're looking at. Okay, it's not strong enough on the 4 hour. We can go to the 1 hour. And again, this is before we're taking our trade. We see it, but again, you don't want to be too eager, because you don't want to guess. You do not want to guess. So, cool. Lower high. Lower high. Lower high. This is still a lower low, if not an equal low. And on top of that, we have all these wicks. So there's no true push in the direction. So let's just look for, again, let's just be a little bit more patient, right? Let's be a little bit more patient. See what I'm saying? Like there's gonna be moments and times where you're waiting for a good amount of time, but that's the point. The point of it all is that you want to wait, so therefore you are sure, opposed to you're guessing and now you don't know what the hell's going on. Cool. All right, we got it. We got action. We got action. So price is now above this. So here's what we're gonna do. We're going to take our trade here. This was kind of just breaking out of our lower high. So we're a little bit late, and it's okay to be late. It's okay to be late. I'd rather you be late than you be wrong. Or you getting in too early, and then next thing you know, you getting clapped. Simple as that. Pause. It sounded crazy. But you're basically not in a good position. All right. We have a 1-to-1 right here. But let's go ahead and make it, again, me. I want to go 2-to-1. So we can go to the top of where price initially was. So yeah, we can go about right here. That's fine. This is fine. I'm okay with this. And we're gonna make it a conditional. If this looks good, then we're gonna hold it out to here, and we're gonna see what happens. Okay, and we're gonna have to go back to the 4 hour to see. So let's make it happen. Okay, let's make it happen. Let's see what's up. Cool. We just waiting. All right, we lost. I'm actually glad that we did, because this is going to teach a valuable lesson for me, and this is also going to teach a valuable lesson for you. Let's find out why we lost. Okay? So we got this uptrend, right? Then we have this correction. What did price do? Price formed a lower high, and then after that, it was still there. Still, and then after that, boom, it broke out, and it was in a phase of consolidation, which is it's looking for an impulse and coiling and coiling and coiling. Let's see if we can go before that to see if we were able to get out of it in time. For me, no. But we're going to leave that as it is. The reason why I want to leave that as it is, I don't want to correct it, I want to try to revenge trade or anything like that, is because this is also something that could happen to you. You can do all of this stuff as far as analysis is concerned, and you still lose your trade. So the thing that I want to understand here, or the thing that I want to be able to get you to grasp, is it's always good to look for deeper corrections. That's the lesson learned here for me. Look for deeper corrections. Always. If you don't get a deeper correction, like a 38, a 50, a 60, if you got a 23, I'm not going to lie, leave it alone. Just leave it alone. Because you don't know what price is necessarily going to do, especially if it runs out of volume, especially if it's wicking. You don't really know what's going to happen, and then you end up setting yourself up, right? So we lose this one. I'm happily leaving this on the channel for you guys to be able to see that not every backtest is pretty. Not every backtest is a win. You're going to lose in backtesting. It's always good to lose. It's good to lose so therefore you can learn, right? So what was our thing that we end up learning today? Let's put it in yellow. Look for deeper corrections always. The minimum that we should be looking for with our corrections is a minimum of 38.2. That's a minimum. But really, the key that we're looking for, our standard, my standard, should be your standard, is 50% or more. Think about it like this in the terms. If you go to the store, do you want something that's 25% off? You like, that's cool. Or what if you saw the same exact thing that you want in the store, but they said it's 50% off, it's 70% off. You're like, nigga, give me this shit immediately. What are we waiting on? That's how I want you to see corrections. If you got a correction on a trend, whether it be up or down, bullish or bearish, right? Well, guess what? You are going to automatically tap in and be like, all right, yeah, I want that. So that's why we're going to look for deeper corrections here. But I'm gonna save this, and I will be posting this. I understand the video is very long, but this is kind of how the process of it goes. We had to wait a long time for our correction because this was just me speeding it through. This was what it started here, April 27th. Yeah, and we finally got in our move days after the fact, May 4th, and then we lost May 5th. Okay, so that just kind of lets you know, like, there's times where you are going to be waiting for your opportunity to strike. This is where you get those concepts and those terms as far as a sniper, right? Where they're just waiting in the cut, waiting for it to happen. But all right, guys, this is it. Oop.